Hi Trader, Tina here once again from ShortMeTina.com with a daily recap. Today's Thursday. Happy Thursday. Hopefully everyone enjoyed their Christmas and so far they're having a extremely happy holiday. As you can see, I'm still a bit under the weather. I have a couple of things that I wanted to cover, in particular why I think this might be the start of like the next bull market or a continuation of the bull market that we've already had, except I think it could potentially last for the next 1, 2, 3 plus years. But before we jump into that, I want to say just please, excuse me, as you can see by the tone in my voice that I'm still severely under the weather. I'm not quite sure why I can't just shake this cold. I'm definitely going to do a video tomorrow, but I think perhaps next week. I think I'm going to take that week off from the daily updates and maybe allow myself just a few days of complete rest and relaxation. That way, you know, I can be a lot better to kick off 2020. So I'll keep you posted on that. Definitely expect the video tomorrow, but I think I may just be off for the following week. And I don't know, we're going to play it by ear to see whether or not that actually works better as opposed to rehashing the same thing every single day. Maybe if I do a video every few days, it, you know, just kind of like space things out, it might make more sense. Anyway, thank you for that. Let's jump in to a recap of the SPY. So we're not going to just pay attention to what went on in the markets today, right? We're going to go all the way back to kind of see what the market, the SPY in particular, has been doing, so you can see why I potentially think that we have just started perhaps the next leg of this bull market, or why I think potentially like things are just getting underway. All right, so we're going to go back to around 2007, 2008. You can see here I have this text message, not a text message, this text that says about 2 years, and that essentially is sort of like the downturn we had in the market from like around 07 to around February of 09. So around here, so we had about 2 years of decline, and then we have this long uptrend, right? So when we bottomed out, we can say in March of 2009, the market, the SPY in particular, we're talking about the S&P 500, was trading at around $67. And we spent about, I want to say about 5 years trending up. We can say from 09 to 2014 trending up. And that's a percentage gain of about, if we can, actually no, we're not gonna calculate the percentage from there. So again, we trended up for about, we trended up for about 5 years. And then from 2014 to 2016, the SPY essentially traded sideways. So if we can take the low within this range, and that low clocks in at around 181, we finally broke out of that range, and that breakout base was around $220. And we kind of trended up some more until we can say somewhere around here, right around 2017, 2018. So from that 181 low, which was around here, to we can say that peak within this range, we can call that around 293 to 295. This expansion here, or this range, we can say it's about a 62% appreciation, right? So follow me. Recap really quickly. We declined for about 2 years. Everyone know that the sky was burning, the huge economic collapse, the housing bubble from 07 to 09. We bottomed out in 09, and we trended up for about 5 years. I didn't do the calculation on that. From 14 to 2016, we traded sideways for a bit. The low in that range clocked in at around 181. We broke free of that range around December of 2016. The upper end of that range was 220, and you can say we kind of topped out, or we ran into resistance for another 2 years, and that level was 293 to 295. That's the level that I talk about a lot. So again, from the low within this range of 181 to the peak, right, at the time, the peak of around 293 to 295, that's about a 62% gain, right? So what we're doing right now from 2017 to 2019, right? We were actually consolidating as well. And then we finally broke through, at least sustained that breakout around October of 2019. So if we calculate similar to here, the low of that range, and let's say we just give it the same amount of appreciation, which is 62%, right? And we calculate the low from this most recent range, or this range bound trading of around, what was the low? The low was around 233, right? 62% from 233 gets us at a SPY of around 377 to 400. So that initial 328 to 330 that I gave for the SPY to achieve before 2020, that was me actually being relatively conservative. I said, well, you know what, we'll probably get there, experience a bit of a pullback until we can continue on. And continuing on, again, if we take the measurement from this low to the peak and we apply it again, right? Because once it broke out of this range, we trended up for quite some time, about a year or two. So once again, we're trading in a range, and now we're breaking out rather. So I think that we can actually put up another 62% from the range's low of around 233, and that gets us once again at a SPY of around 377 to 400. So you're still looking at considerable upside from today's closing price of around 322. So I'm extremely bullish right now on the market. I think this what we're seeing right now, honestly, has just gotten underway, right? Hope that makes sense. What else? All right, the IWM, I'm not trying to make this video like a 20-minute video, so if you want my take on the IWM, please listen to the videos that I've done, any video that I've done within the last month or within the last 3 to 4 months. I've essentially reiterated similar, the same thing essentially. So I think the fact that we broke out of this 2-year range, I said if we can remain above 160, I see at minimum the IWM retesting all-time highs of around 173. Again, if you want more color, definitely go check that out. I don't want to make this upload 30 minutes long. All right, what else? And so I'm just going to shoot off really quickly a couple of trades that we actually hit our targets on within the last few trading days, week or two, especially with this bull market that has no signs of stopping. Things have actually been really good, hence why I usually say you want to know what the overall market is doing, because that should dictate the positions in your portfolio. And because the market has been just every time you turn around, it's just been hitting all-time highs. Considering the market has been very bullish, it makes sense to be net long with a lot of positions. So some of the names that I'm going to roll off again, we actually were able to achieve our targets in the premium member community, but I still think that these trades can work for 2020. All right, so JD, remember, long time ago, we took the trade when the stock hit around 20. So once it hits 40, that'll be 100% gain. But we've actually traded in and out of JD for quite some time. I'm still long. I like JD sitting here at 36.24. I still think that we can get to around $40. So 4 points of potential upside. Snapchat, you know, I've been bullish on Snap forever. Another stock we've traded in and out. I've actually held a core position since the stock was trading around 9 or 10. Sitting here at 15.97, we went as high as 16 today. I definitely think that Snap can 100% in 2020 retest all-time highs of 29.44, but we're not there yet. There's quite some time to actually get there. But for now, I think $20 is definitely a possibility in the shorter term. What else? Peloton, I know that this got, again with Peloton, I know it's experienced like several bear raids, but we were actually able to capitalize off of this. 2 separate long positions. And so again, I would let the dust settle, but I see Peloton at some point hitting around $40. What else? All right, don't forget about Twitter. I actually like this as well. Sitting here at 32.63, we had this major gap down for me. That was a buying opportunity. I definitely see Twitter filling this gap here at around 37.26. So still potential upside left with Twitter. So put that on your radar. And what else? Papa John's Pizza. Now I've been tracking this one for a very long time. I saw the move happening, unfolding. Just was waiting for that prime opportunity to get in. We were able to get in. And granted, we closed at 65.04. You can see it's actually breaking out of this like 2-month consolidation here. We're kind of breaking out, and if it continues this price action, complete change of trend, you can see here, right? So again, this is a weekly chart just to show you exactly what I pay attention to. It peaked in around let's see, December of 2016. We kind of peaked, and we had about 2 to 3 years of a complete downtrend, except for here after this consolidation that occurred in like May to August of 2019. For me, complete change of course, completely different trend starting. So I can definitely see ticker PZZA, Papa John, doing great things, perhaps even revisiting this high of around $90 to $100. Again, we're not quite there yet. In the shorter term, I definitely see it hitting at around $70 or $80. Sitting here at 65.04, huge upside. Put ticker PZZA on your radar. I've seen this multiple times over and over again. A new trend is emerging, and that trend is up in my opinion. All right, so let's cap it there. Tina here once again from ShortMeTina.com. Thank you for bearing with me. If you enjoyed any portion of that video, do 3 things for me. 1, comment in the comment section. What stocks are you looking to get into for 2020? That's the first thing. 2, make sure that you're subscribed to our YouTube channel. We normally do videos every single day. You definitely could expect one tomorrow, but next week I might take the week off so I can just get better. So you want to make sure that you're subscribed, so when I do upload a video, you'll know that it's uploaded. And lastly, I'm hosting a free 14-day trading course, so you can definitely head on over to our website if you think you can learn anything from me, ShortMeTina.com, and sign up. Be safe, be well. I will talk to you tomorrow.